Banks are protecting their assets. Let's have a look. Good afternoon, everyone. Florian Heise here, and welcome to another episode of HeiseSays. I've got my afternoon stein of coffee, and I hope you're all having a good Friday. You know, it's probably beer o'clock around most of the eastern part of Australia. You know, even if you're working at home, enjoying a good beer or a good stein of coffee, hope you're looking forward to the weekend. Now, I thought we'd have a look at this article written by Alexis Carey from news.com.au, in which she discusses the move by the NAB. You know, the nice banks, because banks are apparently always your friends. They're allowing homeowners to defer repayments for 6 months. For 6 months. Now, there's some people saying, oh, this is good. Look at the banks. Look what they're doing. Helping people out. Helping people out. But I'm going to be the cynical bastard that'll ruin it for everyone, because that's what I have to do. I'm a YouTuber. And I'll bring up the arrears rates. Just have a look at how the number of people that were going, 150 days plus arrears, in Northern Territory and Western Australia, how it climbed. Now, we're having significant news we're hearing every day about more people losing their jobs. So what would happen if people lost their jobs, more and more went into arrears, the banks started putting pressure on people to make payments, and people started foreclosing one after the other, after the other, after the other? What would happen to the property sector? What do you think? What would happen to our property prices that have been climbing? Perhaps this graph maybe would start to mirror. Maybe people will be forced to sell. Maybe the value of a lot of the properties would start to decline because less people are going out purchasing, less people are willing to buy now. Sure, there'll be some people that will go and take advantage of the situation, but will that be enough to sustain the whole market? Particularly the foreign investment, where it's fallen off a cliff recently because it really spiked. How's that going to be the next 6 months to a year? But don't worry, the banks, they're taking care of it. They're allowing people to defer their loans repayments for 6 months, and that might keep them from being forced to sell, or maybe they could sell a bit slower so it couldn't affect the market. A similar thing happened in the US, where they just didn't foreclose on people's houses. Over there it's a bit different because people can send the keys back. Just send the key back, abandon the property. Here in Australia you can't, it's tied to you. It really is a death loan, isn't it? So if housing were to plunge significantly, brought on by the changes to the economy, what would happen to the banks? How much of their capital is tied up in housing? How would that affect them? So there's an incentive for them to avoid a chain reaction like that, where housing would just fall and fall and fall. But how long can they keep it up? What do you think? Let me think. Am I just being a Debbie Downer on this, which people are reporting as good news? Let me know your comments before we go through this article. Maybe I just need to go get a rum for Friday. So Aussies struggling to keep their heads above water as a result of the illness pandemic have been thrown a lifeline after NAB announced its customers would be able to pause their mortgage repayments for 6 months. The announcement came after the Australian Banking Association CEO, Anna Bligh, announced a multi-billion-dollar package for small businesses also struggling to stay afloat due to the illness outbreak. Under the new scheme, small businesses will be able to defer loan repayments for 6 months, a move designed to keep the doors open and keep more Aussies in jobs. If you're getting that desperate that you can't afford to repay the loans of your business, I guess, are people expecting it all to turn around in 6 months' time? Maybe. Maybe there'll be, in 6 months' time, there'll be a reset to the, it'll go right back to normal. Travel will commence again. International travel. I suspect even if everything were to reset, the economic impacts are going to be longer, going to be felt longer. I think people are going to appreciate the advantages of working from home because they've been forced to. Maybe businesses will adopt new technology. Maybe people will travel abroad a bit less. So it would apply to more than $100 billion worth of existing loans and would pour $8 billion back into small businesses' pockets. This is a multi-billion-dollar shot in the arm for businesses that need it the most, Ms. Bly said. She stressed that the package was targeting those most at risk of financial hardship, but said banks could consider action for those experiencing mortgage stress down the track if needed. She said the pandemic was causing devastating effects across the economy, but the small business was being particularly hard hit. Banks are now working on the details of the small business package and could start rolling it out as early as Monday. Businesses are doing it very tough, but rest assured, banks have got your back. Wow. Banks have got your back. They're not your friends. They're not your friends. Maybe I've heard too many horror stories from brokers about banks coming in and forcing people to entirely pay everything off because they want it out of an industry. They wanted to minimize their risk. What do you think, guys? Am I being too cynical in seeing that this is the banks just propping up their assets, their property that they own, that all their mortgages are tied to? This package is for small businesses which today have the most urgent and critical need. If they start to see any critical need in other areas like mortgages, they know they will have to look at that. Businesses impacted by the illness need only register with their bank, and provisions will be put in place to fast-track assistance. Ms. Bice, how about instead of all this crap, you just force the banks to pass on the 0.25% cut? How about that? Ms. Bly said the measures were devised to dovetail the package announced by the RBA yesterday, which included cutting the official cash rate to 0.25%, setting a target for the yield on 3-year government bonds, supplying credit to business, and an adjustment in interest rates on accounts financial institutions hold with the RBA. And the banks have responded. So, within moments of the ABA announcement, Suncorp Bank CEO Lee Hatton confirmed a deferral of principal and interest repayments would be available for small businesses affected by the illness for 6 months from Monday. Banks are here for Australian small business owners because we know that when small businesses succeed, local communities thrive, Ms. Hutton said. Now, I'm just so skeptical about it because how many small businesses have had difficulty getting access to finance? Why are we a nation of house flippers? Banks are here for Australian small businesses, yes. If you're a small business owner and you're worried about your finances and business because of the illness, then don't be shy, pick up the phone, drop into our store or get in touch with your business banker. We're here to help make things easier to get small business owners back on their feet and their businesses back on track. Suncorp will have a fast-track approval process to ensure customers receive support as soon as possible. NAB also announced a sweeping support package for businesses and personal customers and confirmed its business clients would also be able to defer payments on a range of floating and variable rate business loans for up to 6 months. Home loan customers experiencing financial challenges will also be able to pause their repayments for up to 6 months. And NAB will cut 200 basis points from the rate on new loans and all overdrafts on its flagship digital business product QuickBiz, effective March 30. It will reduce variable rates on small business loans by 100 basis points from March 30, on top of the 25% reduction announced on March 13. NAB also announced reductions of up to 60 basis points on fixed-rate home loans, although, like CBA, there are no changes to home loan variable rates. For depositors, NAB has introduced a 10-month term deposit at 1.75% per annum. ANZ will support small and medium businesses by decreasing variable interest rates for small business loans in Australia by 0.25% from March 27, resulting in a 0.5% per annum reduction since last week. All impacted customers can request a 6-month payment deferral on loan repayments for term loans with interest capitalised, and ANZ is also making available temporary increases in overdraft facilities for 12 months and introduce a reduction of 0.8% per annum to a new 2- and 3-year fixed rate of 2.59% per annum for secured small business loans up to $1 million from April 3rd. For home loan customers, variable interest home loan rates will decrease by 0.15% per annum across all variable rate indices from March 27. A 2-year fixed rate of 2.19% per annum for owner-occupiers paying principal and interest will also be introduced, which is the bank's lowest ever fixed rate home loan. Customers can also request a deferral of home loan repayments of up to 6 months, with the review at 3 months with interest capitalized. ANZ today announced an unprecedented support package for small business and home loan customers, with the potential to inject $6 billion into the Australian economy and assist in the recovery of the illness crisis. Westpac will support the cash flow needs of small business customers. Overdraft will be reduced by 200 basis points for new and existing customers from April 6th. There will also be a 100 basis point reduction to variable interest rates on small business cash-based loans from that date, as well as a 2.29% per annum fixed rate home loan for 1, 2, and 3 years for owner-occupier customers on principal and interest payments with a Premier Advantage package from March 27. It sounds like this article is turning into an advertisement for the banks, isn't it? Westpac is also introducing a special 12-month term deposit of 1.7% per annum to provide customers a higher return on their savings, an increase of 70 basis points up to $500,000 per customer. For Australians aged 65 and over, the rate will be at 2% per annum for 8 months, up to $500,000 per customer. The bank has also announced a $10 billion home lending fund to support the economy by assisting more Australians into home ownership. I mean, is now the time to get into home ownership, guys? Or wouldn't you wait for the market to adjust when people are forced out? But it's not going to happen, is it? CBA. The Commonwealth Bank was the first of the Big Four to react to the RBA's rate cut, revealing yesterday it would not cut standard variable mortgage rates in response to the central bank's move. In a statement, CEO Matt Corman said the bank recognised it was a very concerning time for our customers and the community, and that we were living in unprecedented times which called for unprecedented measures. We are focused on delivering the best possible service to all of our customers and supporting the Australian economy, he said. Our branch network is open, our call centres are open, and we are helping our customers use our market lending digital technology to do their banking through NetBank and through their app. It's advertisement. Following today's reduction of the official cash rate by 25 basis points, we are taking deliberate steps to further support the parts of the economy most in need. In particular, we want to ensure that we help keep small businesses open so that they can help keep Australians employed, and that we do everything we can to support households and older Australians. The bank announced a 100 basis point interest rate reduction for all existing cash-linked small business loans, a 60 basis point increase in 12-month term deposits to 1.7%, a 70 basis point interest rate reduction in 1, 2, and 3-year fixed home loan rates for owner-occupiers paying principal and interest to 2.29%, and changes to home loan repayments which will release up to $3.6 billion in cash for Australian households. And profiteering. While the banks have been keen to tout their support for small business customers, attention has turned on to past interest rate cuts. According to comparison site Mozo, by holding back some of the official interest rate cuts to the RBA when they began in 2011, the Big Four have pocketed around $446 million per month in extra revenue, a staggering $23.3 billion in total. By delaying the effective dates of the interest rate cuts, the banks have raked in $1.1 billion since 2011. A Mozo analysis revealed that if passed on in full, the average variable home loan rate will be 3.34%, down from 3.59% at the moment. The average monthly cost saving would be $55 on a $400,000 loan for an owner-occupier paying principal and interest. With so many negative pressures on the economic activity, we need our biggest financial institutions to provide relief. Yeah, well, I mean, the banks aren't on your side. So guys, am I being too cynical in seeing this as just a way for them to prop up their balance sheet? Let me know your thoughts and opinions in the comments below, guys. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel here on YouTube or on Patreon for a small monthly fee. You can use our affiliate links at Amazon or eBay for your consumer purchases, or independent reserve and Kucoin for your crypto trading. You can also buy our merch from the HeiseSays website or from the Teespring link below, or donate directly to PayPal if you want to support us that way. Thanks everyone, have a great day, and I'll see you next time.